Hey everybody, it is Chuck Barone on Tuesday, August the 6th. Man, here we go, locomotive heading toward December 2024. What a difference a day makes, right? Yesterday was the end of the world. Today, meh, not so much. Markets bounce back. Everybody shrugs it off like, well, that was just a little blip. Guys, these are the craziest times I've ever seen. Bond market whipsawing, jumping tens and 20 basis points. I got to say, man, if you're a trader and if you're really like in the market and trading actively, which I know a lot of you guys are not, and that's just a sign of intelligence because to do it well, you have to literally do it 24 hours a day. But if you're a trader right now, you're just having the greatest time ever because these prices whipsawing up and down and all around like they are, these guys know how to play these markets. They're making money hand over fist. You're going to read when they start coming with earnings, you're going to start reading about Goldman and all the Wall Street guys and how they're trading parts of their companies are making Brazilians of dollars. Anyway, I babble. Forgive me, guys. Let me take a half a second. Welcome everybody to the show. As always, guys, thank you very much for your support of the show. We really appreciate it. Just got done with my makeup guy here. That's pretty funny, if only, right? Um, and we got a lot to talk about today. Not a lot of data, but a lot of interesting stuff going on. Okay, so let's talk about these markets. Like I said yesterday, complete catastrophe, basically, looking like at the end of the world or the beginning of the end of the world. And the market's just cratering. Today, we didn't get quite the bounce they got over in Japan, but we got a little bit of a bounce. So the market did. It's not going to go straight to the crapper, right? So we bounced today. You have the Dow up 293 points, sitting at 38,996. You got the NASDAQ up 166 points, sitting at 16,366 points. You have the S&P up 53, sitting at 5,239 on that index. Now, these bounces were nowhere near the losses that got taken yesterday. Not quite, getting back to even, but it was good to stop the slide. Good for everybody to take a half a minute and catch their breath and go, wait a minute, okay. So really what changed yesterday that it just all of a sudden was the tipping point? There really was not that event that I saw that made everything change. So you're going to get everything back to normal here. The bond market basically reverses itself yesterday with yields jumping, bonds selling off, 10-year sitting at 3.89%, now up 10 basis points today. The 2-year sitting at 3.97%, up 9 basis points today. You can see only 8 points on that inversion. It was righted for a little while today, but not long. That's going to be interesting to have the inversion get back to normal, a normal yield curve with, as you go out in time, yields rising instead of this in what we've been having, shorter term rates higher than longer term. It's going to be interesting to see that because a lot of indicators right now flash in recession coming. I kind of have been predicting that. I don't think it's going to be, a 2008 recession or a pandemic kind of freak out recession. It's just going to be the normal shedding of excess baggage, getting rid of the fluff. And businesses do that from time to time. I think it's usually a good business move. That's why markets like that. It's funny, company stocks go up and they announce layoffs, right? But these are these kind of corrections that we need from time to time in a healthy market, guys. So it's not the end of the world, not yet. We'll see. Tomorrow's another day, right? Today, the dollar bounces back up 19 basis points, now at 102.97. So touched almost breaking under 102, now bouncing back up. I think the dollar will get stronger. Nothing really changed with the dollar either, unless you really believe the Fed's going to come out with some kind of emergency cut, which they're not going to do. Precious metals today, not a good day. Not a great day for metals today. Gold falls another $21.50. sitting at $2,389.90. Silver falls 25 cents per ounce, sitting at $2,695. Would like to see both of these a little bit higher, but silver is the one, guys. It really has not made another real challenge at breaking $30 for a while now. So we're going to get back to the charts on this one. Have to see where silver is going to need to fall to get a bounce. That one's looking a little sketchier. Gold, of course, still up 20% for the year, so everybody happy with gold. Oil today rallies up a little, up 15 cents per barrel, sitting at $73.09 for a barrel of West Texas Intermediate, right in the pocket where we figure it's going to stay, 70 to 75. There are these little breakouts from time to time, upside, downside, but it always wants to get right back to that, in that trough somewhere, and that's where it is now. Bitcoin today rallies up after yesterday's catastrophe, picking up $2,890 per Bitcoin, $56,480. I did not get a chance to do any charting on Bitcoin, but I think 54 was the number, the bounce number, and that's where it ended yesterday. Maybe it was 52, I'm not sure. So let's see if Bitcoin can turn it up and make a run at 60 again. That's going to turn into resistance. But in simple charting, it's going to be resistance. Let's see if it can get back up to that. All right, let's talk about stuff today. Markets, as I mentioned, talked about bouncing back a little bit. It's crazy, guys, really. I mean, they made up, not, like I said, it wasn't making up the whole disaster that was yesterday, but I think by the end of the week, they'll be pretty close. I'm not like a big stock bull, don't get me wrong. I just think that this market still has a little bit of legs to it until I really see earnings crater out, which I have not seen yet. The market always tends to want to be bullish rather than bearish. That sentiment's going to be there. We got an election coming. Usually the economy is going to keep its head above water through the election. Maybe the recession comes early next year. It's going to be interesting to watch it all, of course. But I don't think that today's the day, right? So really, what changed? I'll tell you what changed. Not much, right? Yesterday, totally all about fear. Oh my, that's happening. This is happening. We know when the Fed cuts rates, they're only doing it because the economy is showing signs of weakness. That finally kicked back in, right? Remember, I've been telling you guys have heard me say it a million times. The Fed raising rates does nothing to bring inflation down. The Fed raising rates slows the economy down, usually causing a recession. And that recession then, and the loss of employment and all the bad stuff that comes with that then brings prices down, or at least stops them from going up. So now the Fed's going to have their recession. Now the question is, can they manage it? Is it even possible to manage it with manipulating rates like they do, to bring it in without a recession, make that mythical soft landing? We'll have to see, guys. You've been listening. I have my doubts, serious doubts about that, right? Yesterday was all about the yen and carry trade. Did you hear about that at all today? I did not, okay? Think everything that was bad yesterday, that was good last week, that's now bad, that's now okay again. What really changed, guys? Not much, right? So are all of our problems fixed? No. Are we probably heading toward a recession? I would say yes, right? So you have now all the analysts after yesterday. Wow, man, a flood of analysis coming out, right? JP Morgan says, JP Company, and I trust their analysis. I think they're pretty sharp. They say that the market has not hit a bottom yet. No signs of hitting a bottom. And they had all their analysis in there, really blah, 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 Wall Street stuff. But they said that this pullback was quote unquote legit. Bank of America comes out with their analysis. They say as soon as you get the first rate cut, sell it all. So this is to what I've been telling you guys about. Buy the story, sell the news, right? Buy the rumor, sell the news. That's this thinking here at Bank of America. It's really interesting, guys. I mean, now the strategy in the market changing is the Fed's doing this, at least a head fake toward a pivot, right? it's just really going to be crazy, guys. The once the Fed starts cutting rates, historically stocks go down, especially if it's in a hard landing scenario with the recession. Is it certain that we're going to get a hard landing? No, not yet. But I would say the odds favor recession, even if it's not a deep one, than this perfect mythical soft landing stuff. All right, we did get a little piece of data out today. U.S. trade deficit falls. Yay, everybody's been looking at that because our trade deficit is freaking horrendous, man. It's hundreds of billions of dollars a year in trade deficit, but we're buying more from our trade partners than they're buying from us. There's a lot of political crap attached to that, but the trade deficit did actually come down. And why? Was it because of genius politicians and tariffs, or is it good government that did it? Was it we have amazing products now all of a sudden? No. It's falling demand. Bad news for this soft landing crowd. Now, even at this level, even at the most basic foundational level, import, export, right? Signs of weariness, fatigue, and spending. It's only going to continue to get worse, guys. We already know what's been happening here. The consumer is the be-all, end-all in this economy. The government and everything is tilted now so far to the disadvantage of the consumer and to the advantage of the producer class, right? Sooner or later, they're just going to run out of gas, man. Or their electric car, or electric motor. You know what I'm saying, guys. This is a simple analogy, but I mean, I just know when you see the evidence we've seen repeatedly over time, things just don't change. X plus Y always going to end up equaling Z. So when you follow a logical progression like that, you can kind of see what's coming here. Another notch another X in this soft landing thing. It's just nothing really pointing to that right now until I see evidence of it. Again, the only thing holding me up at all right now is companies' earnings haven't been terrible. Most companies are beating their earnings estimates. They're not revising estimates down to the point where it's, hopping over, that's not happening. So we're in a very fragile part right now for certainly for our economy. Listen to this, guys. U.S. households, champions of champions, piling up credit card debt in world record amounts. You guys remember how long ago was it I was freaking out because we passed $1 trillion freaking dollars in credit card debt. It is so bad because the rates people are paying on $1 trillion is so astounding. These banks are just they're minting money. Listen to this, guys. The number is now 1.14 trillion. So they're just piling it on. Listen to this. Credit card debt is up by almost 50% since 2021. So since basically COVID time, credit card debt is up by half. So from 1,000, 1,500, from 700 billion to 1.14 trillion. Guys, this can't end well. Delinquency is rising. We've already talked about that on the show. Delinquency is rising not only for credit cards, but these outrageous car payments people are trying to keep up with. The consumer is going to get obliterated in the end, guys. When you're talking $2,500 a month to rent a place or buy one at $3,000 a month. You're talking $1,000 in car payments. You're talking interest on credit cards of 20 to 30% somewhere in there, depending on who your bank is and what your credit situation is. Not going to work out well. Not going to finish well, guys. The consumer going to be able to pull the economy along and buy all the extra stuff they need to buy to keep the economy going, do the shopping in the malls, eating in the restaurants, drinking in the bars, all the activity and traveling and airlines. And are they going to be able to do all that? We'll see. Last, to finish, you guys seen the millions of Brazilians of car commercials with this Car Shield company, right? Car Shield, man, it's like basically an extended warranty for your car. They had what's his name, frickin' Ice-T, and a couple other big celebrities doing their commercials for them, um, talking about how you don't want to get stuck with your transmission bill or your blown engine bill, man. All these shills up there, yeah, I saved me 7,000 and I saved this, and Bob be all these testimonials and all this crap. Man, they've been barraging the TV with commercials on this crap. Now they're all the copycatters doing the same thing. Listen to this, guys. These knuckleheads, scamming shitheads, got hit with a $10 million FTC fine. They're gonna get blown up, man. That's all there is to it. Complete fraudulent scam. Got caught with, what are they calling it? Deceptive advertising, because they're talking about you can take your car to any mechanic, you can't. They're talking about basically if anything breaks, it's covered. It isn't. They're gonna give you a rent car, yeah, at your own expense. You can't believe the bullshit that was attached to this. The whole thing's a big hustle. You guys have that stuff. Now, I'm not talking about a warranty you bought through your car dealer, okay? Usually those are okay. But if you're on one of these TV car warranty deals, just know this is happening, guys. They're charging around $120 a month for these extended car warranties, and they don't cover anything. And even if it's supposed to be covered, they're not going to pay it. They're not going to let you bring it to your mechanic. Everything takes forever. It's just it's a disaster. If you're in it, get out of it. If you're thinking about it, don't do it. If you don't know anything about it, you're in the right spot. Anyway, guys, I'm going to cut out of here early today. I was waiting to see, they got the new Democrat VP coming out to speak. I want to get an idea of who the hell now this guy is. Be interesting to hear what he's got to say. And I guess now it's on, the big election. Anyway, guys, that's it for the day. I appreciate your support. Please hit the thumbs up, hit the like button, guys. It helps the show a lot. Helps us get more views. We need to get our views up, guys. Please help me with that. I will actually be on the comments today. So if you've got anything to say, want to make some fun, ask questions, whatever it is, hit me up in comments. I'll be back tomorrow. Hopefully tomorrow will be a nice, easy day before we get starting to get the data Thursday and Friday. Until tomorrow, guys, everybody take care. See you tomorrow.